Hello, good morning. The next topic is journalizing transactions. Chapter objectives are identify the stages of accounting cycle, appreciate the role of journal in accounting business transaction, understand the rules of debit and credit applicable to different types of business transaction, describe the various categories of accounts, pass appropriate entries for recording transactions in the journal. Now, what is accounting cycle? The stages involved in the accounting cycle are: first, we will create a journal for recording the transaction. Next, we will create a ledger for classifying the transaction recorded in the journal. Then, we will prepare the trial balance, trading account, profit and loss account, balance sheet for summarizing the result of transaction. Computing accounting ratios for determining the liquidity, solvency, and profitability of the business. Now, what is journal? Journal is a book that records all daily transactions in the chronological order of the date. It is also known as Book of Original Entry. The process of recording the transaction in journal is known as journalizing. This is the format of journal where date should be there, in which date the transaction has happened, what will be the particulars, that with which account will be debit, which account will be credit, ledger folio, amount of debit and amount of credit. Types of transactions. All types of transactions are categorized into three types: transaction related to personals, transaction related to properties and assets, transaction related to income and expenses. Depending upon these transactions, the accounts under which the transactions are recorded are classified into personal, real and nominal. Personal account. Personal account includes accounts of persons and organization with whom the business deals. Types of personal accounts. Natural personal accounts. It includes accounts of persons such as John account, Ram account. Whereas artificial personal account, it includes accounts of organizations such as accounts of company, club and government. Representative personal account. It includes accounts that represent a group of persons such as outstanding salary account for employees or prepaid salary account for employees. Now, what will be the rule of debit and credit? Debit the receiver, credit the giver. Who receives, debit that account. Who gives, credit that account. Next is real account. It represents account of properties and assets. Types of real accounts. Tangible real accounts. It represents accounts of things that can be touched or measured, such as cash account, furniture account and stock account. But there are some assets which cannot be touched. Intangible real accounts, that is patent account and goodwill account. What is the rule of debit and credit? Debit what comes in, whatever asset comes in the organization, it should be debit or property, and whatever goes out, it should be credited. Next is nominal account. Nominal account represents accounts for income, gains, expenses and losses. Example: rent account, rates account, insurance account, loss by fire account. Rule of debit and credit: debit all expenses and losses of the organization, whereas credit all the incomes and the gains of the organization. Now, classification of goods account. Goods are the objects purchased by the business for resale. These accounts are related to goods are classified into purchase account. Whatever goods has been purchased, it will be recorded in the purchase account by debiting it. If it has been sale, it will be recorded in sales account, but it will be credited. If any purchase has been returned, it will be credited in the purchase return account, and if there is a sales return, it will be debited in the sales return account. Passing entries to the journal. I just give an example like John starts a business with a capital of rupees 20,000 on January 1st, 2000. He purchased furniture for cash of rupees 5,000 on January 5th, 2000. He paid rent for business premises of rupees 2,000 on January 10, 2000. The first entry on January 1st. Cash account has been coming in the organization, therefore cash account will be debited by 20,000. Who is giving it? John is giving it by name of capital account, then it will be credited by 20,000. Next entry, both are real account. Furniture is coming in and cash is going out. Furniture account will be debited with amount of 50,000 to cash account, because it is going out, it will be credited by rupees 5,000. Same amount. Next is rent account. Rent is a nominal account, that is expenses, it will be debited with 2,000. We were paying it in a cash. Cash is going out. It will be credited by rupees 2000. So these three entries are there. With the help of example, you can do more entries. In this chapter, you have identified the stages of accounting cycle, understood the role of journal in recording business transaction, described the rules of debit and credit applicable to different types of business transaction, described the different types of goods accounts, learn the passing of entries to the journal. Thank you. In the next chapter, we will do ledger, posting and trial balance.